Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Thursday, January 22nd, and my name is Raleigh White, and I'm coming to you live from a cloudy, overcast day here in Austin, Texas. And quite honestly, folks, this is the calm before the storm as we anxiously await the arrival of the North Pole here in Central Texas. Man, is it going to get cold. Now, in today's session, Roger's going to be covering a range of important topics with a continuing focus on day trading. Now, he's going to begin by giving us the midday market analysis, and he's going to share what his top watch lists are for the stocks that he's looking at this afternoon. Then he's going to give us an introduction into the market internals and how to use them. He's going to talk about what are the key levels that he likes to focus on when using market internals. And then he's going to share the differences between reversal trades, pullback trades, and breakout trades. How the Alpha Zone Pro, one of his key platforms, helps to generate trade alerts that are given in the Trading Zone Live, and the differences between trading the indexes using options versus futures. So we have a terrific agenda lined up for today, and I'm excited to hear what Roger's going to be sharing. Now, if you have any questions during Roger's presentation, please type them in the chat panel, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also remember, folks, that I have opened the door to the chat room to everyone, and we do have some ground rules. If you're going to post, please be kind and supportive. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. Number four, keep side conversations between yourselves and another individual to a bare minimum. It just interferes with what the rest of us are trying to do because we're listening to Roger sharing information and knowledge that's designed to give us, an edge in the market and to help us all become much more confident and consistent in our trading activities. Now, if you were with us this morning for Roger's pre-market briefing, you'll note that there were several key catalysts that we needed to be aware of. On the Magnificent Seven front, we noted that Google, Tesla, and Amazon were all up about 1% coming into the open. On the chip sector, we noted that AMD, Marvell, and Micron were also up 2% coming into the open. On the consumer front, we had Procter & Gamble and McCormick all scheduled to release their earnings before market open. On the health front, we had Abbott Labs releasing their earnings before market open. And on the industrial front, we have GE releasing their earnings before market open. So obviously, folks, we are right here at the beginning of what will be an active earnings season. And we have to be aware of those stocks that are going to be releasing earnings before market open. On the international front, we saw that the Euro stocks were up 1.3%, basically sigh of relief after Trump backed off of the tariffs that he was threatening in Europe, and the Nikkei was up 1.7%. So we had some tailwind coming into the open today. And on the Fed front, we noted that we had jobless claims coming out and crude inventory reports. Normally, crude comes out on a Wednesday, but when Monday's a holiday, that shifts the day. That's why we're seeing it this afternoon on a Thursday. Now, people are wondering, Raleigh, what are these catalysts all about? Why should I even pay attention? From Roger's perspective, information that is either known or will become known during today's trading session, but is not yet priced into the market, these are volatility flashpoints. We need to be aware of them. So if we're taking a look at maybe investing in or trading in stocks in the Magnificent Seven or chips or consumer or whatnot, it's always good to know exactly if it's a catalyst, what that catalyst is about, because it could have an impact on decisions that we make. And that's the benefit of these catalysts, looking at the markets holistically as we narrow down to our opportunities. Speaking of that, Roger then shared with us 20 stocks that he had on this morning's watch list. On the short side, we had Oracle, HIMS, Microsoft, CPNG, Shop, SFM, Net, and Netflix. And the thing that he pointed out here is he said, man, it's never good when you see companies like Oracle and Microsoft and Netflix. These are these are mags, right? sitting on his short list, but nonetheless, they are sitting up as decent stocks to potentially short. On the longs, there were 12 longs that he had identified there. And he pointed out that at this point in time, he seems to be favoring more blue chip stocks than tech stocks in today's current environment. Of course, that shifts throughout the week. But right now, once again, he's a little bit more enamored of blue chip stocks than tech stocks. The other thing I want to share with you is this: these are watch list stocks. What that means is that these large cap stocks, for a variety of reasons, are on Roger's watch list. It doesn't mean that he's automatically going to trade them, but it does mean that they're setting up for potential trades. And if he sees any of these that he likes, he's going to post those in the trading pit or in other of his premium alert services. Now, as far as his pre-market thoughts were concerned, we noted that the futures markets were up pretty nicely across the board when we got together this morning at 8 o'clock. He also pointed out that the put call ratio was balanced and that the VIX was lower, but it was still in that uptrend, but below that 20 level, which is our first warning when we see the VIX. He also pointed out that stocks above the 20-day moving average were rising, as is those that were below the 20-day were slowing. So momentum also picking up in the markets. And he noted that the QQQ and the SPY were both sitting there at or above support and appeared primed and ready to make a move. But he did identify some red flags that we needed to be aware of. He did note that the mags were down. So once again, he gets concerned there because it's such a big catalyst in the markets, and the mags being down can be a drag. He also pointed out that the chip sector is doing extremely well, but it's overextended. The word he used, it's toppy. It's very, very overextended, and he's expecting there to be a pullback. So that's a little bit of a red flag. And he also noted that 51% of the NASDAQ 100 companies are just sitting there right above, the 50-day moving average. And that's a pretty key indicator that he looks at. So these are, whoa, let's hold on for a minute, little red flags that he wants us all to be aware of. The end result of all this is he said, look, folks, based on the way the markets are moving, he wouldn't be a bit surprised if initially we saw some early profit taking. And once that happened, he expected that, the markets would basically sell off a little bit, consolidate, form a base before then potentially moving higher. And that's what he basically felt would happen for today. So sage advice. And as a matter of fact, I'm looking right now at the charts, and I think he called it exactly on the SPY. The SPY opened up, it sold off there a bit, it consolidated, and it moved higher. And right now it's trading, or it has traded above the overnight high. So that's exactly what Roger felt could happen. So we've got a great group of folks here today, as we always do in the VIP trading room. And Roger has put together a terrific agenda for us today with a continuing focus on day trading. Now, today he's going to start by giving us a midday market analysis and his top watch list stocks. And as you know, he begins the day with a pre-market watch list. He refines that at midday, and then he takes one more look at it a little bit later in the day, right around 3 o'clock or so, to see if there's any opportunities to swing and hold overnight. He's then going to go ahead and introduce to us market internals and how to use them. A lot of questions about these market internals, and they're critical in the decision-making process. He's also going to share with us what the key levels are that he likes to pay attention to when he looks at market internals. Roger's a huge believer in levels. He draws them for us all the time. Well, there are key levels also in the market internals. He's then going to talk about the differences between reversal trades, pullback trades, and breakout trades. And he's going to talk about how the Alpha Zone Pro, which is one of his flagship platforms, helped him generate trade alerts that he gives us in Trading Zone Live. And then he's going to talk about the differences, okay? He's going to compare and contrast day trading the indexes with options versus the futures market. So it's a terrific agenda. And if you've got any questions during the presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember, I've opened up the chat to everyone, and we have some ground rules. Always be kind and supportive in your posts. Keep to the topic. No political discussions allowed whatsoever. And keep side conversations between individuals to a bare minimum because it just interferes with what the rest of us are here to do. And that is to learn from Roger and the education, the information he's going to share. Because after all, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, guys, hey, let's say hi to Matt. Matt's looking good. He's got the hat on backwards. Man, he's strapped in. He's been hot today, Roger. He's been
He
hot.
has.
Yeah, we've been busy.
He has been
been
hot today,
busy.
actually. He has been. He's been on fire today.
Yeah.
How have you been doing today, Matt?
2 for 2, about $1.85 in profits.
That's great. It's beautiful.
Excellent. When he's got his hat back on backwards, man, that's all business.
Yep.
And Roger, it's always good to see you, my man. I always enjoy seeing you at 8 o'clock in the morning. And people, if you're in the room here today and you're not with us at the pre-market briefing, you're really missing something because Roger does a great job of setting the table. And the key takeaway for me was this, Roger, your expectation that you expect that there would be an initial sell-off in the market, some consolidation, and then a move coming back later in the afternoon. And I'm just looking at my 15-minute chart of the SPY, and that's exactly what that's what you basically forecasted. QQQ,
Yep.
the same thing. Bonds doing the same thing.
Exactly.
So, any surprises? Given all that, any surprises?
No surprises at all. Actually, I'm a little surprised that we're as strong as we are on tech right now. Here, let me share my screen real quick so we can all speak the same language, so to speak. So here is the SPY, and here's what we were talking about today, by the way, which you just mentioned a second ago, was the SPY, and this is it right here, right there, and that's kind of what we were talking about. And by the way, look how close we can look at the level that. It really does pay
it's like an electric fence, It's kind of like, don't you touch it and back off.
Yeah. So folks, I want to show you guys. This is the 5-minute chart. So don't say I didn't warn you, but I did give you this at 8:45 this morning. I gave you these levels. You have these levels. You all have these levels. Here they are. As a matter of fact, I'll show you where you could find these levels. Find them right here. And they work really well, too.
Oh, yeah, they do.
Here, right there. They're all here. Here's 684.95 right there, and 687. And 687.18 right there. Right at that level, as I told you this morning. And then we came back up. Yeah, I thought we were a little overextended. Now I think we're in pretty good shape to go higher, and we are in the afternoon. I like the market right here. I like market internals right now. I've been liking them all day. I'm going to be talking a lot about market internals today. Overall, I'm liking what I'm seeing on the SPY, and I'm liking what I'm seeing on RSP, which is looking really good. And I like what I'm seeing on the Russell, and I like what I'm seeing on the Dow. Okay, all that looks great. All that looks great. What I'm concerned about is QQQ getting a little stronger right now. MAGs. Concerned about MAGs, which are only at the 8-day right now. They have to really work quite a bit to get up there. And most importantly, SMH. I think SMH got a little bit ahead of themselves. I think SMH in the next 2 days is going to come down right here. Now, we have earnings on Intel tonight. Okay, we have earnings on Intel tonight. Those earnings on Intel are going to be volatile. We will have volatility from the markets. We don't know what Intel will do tomorrow. We have absolutely no idea what it'll do tomorrow. The last 4 large cap AI, now I'm calling them AI. Chip stocks. Now you got me doing the same thing.
It's like energy and nuclear, utilities and nuclear.
That's right. That's exactly right. Now I'm doing the damn thing. So, utility, not even energy. Utilities is nuclear, Raleigh. I mean, talk about marketing, right? Whew. If you can make a utility company exciting, that's like making a paper company into selling some, I don't know, tobacco or something or alcohol. I mean, it's really up there. Okay, so momentum levels are looking really good. Again, as I said, my main concern is semiconductors. They've been on fire lately. Even when the market cooled off, they did not cool off, but I think they're getting ahead of themselves a little bit, just ahead of themselves. So I would be very cautious, and I would also be cautious in light of the fact that we have earnings on Nvidia. I keep saying Nvidia, on Intel coming out tomorrow. I wish it was Nvidia. Now, and I'll talk about this, but right now, momentum levels, the Volt has been on fire today, all day, on fire. We had 2 trades already in the Trading Zone Live, which we'll be talking about today. We'll be talking about that. And you could see right here the SPY. This is the Volt right here. See the candles. The candles is Volt. The SPY is this purple thing right here. Okay, you could see it right here too. This is the SPY. You could see that this move right here. Right, this is the purple line is the SPY, and you could see very clearly what happens right here. Volt is just going up all day, no pullbacks. But what is this? What is the SPY doing? It's coming down, and then it comes and becomes best friends with it again. What happens over here? It diverged, and then it went up again. Well, we made money both of those times. We did. We made money both of those
Yeah,
times.
that's the divergence we look for. Yeah.
That's one of the classic type of trades that we look for. So I'm going to talk a little bit about these trades today and show you how we look at market internals. But we really do. And see, my theory is this: when the Volt is like this, that's when this works really, really well.
Yeah.
When the Volt is, and it does this quite often. It'll do this 2-3 days a week. But the days that it's choppy and all over the place, forget about it. It has no value to me.
Now, Roger, is the Volt also synonymous with the cash flow indicator? Are they one and the same?
Yes. Again, the marketing. They love to but that's what it is. It's this is the Volt is volume of coming in and out of the entire market, and you will find out that volume typically precedes price. Okay, volume precedes price, and so anytime this diverges. And we have it set up exactly the way we like it. So let me kind of go, since I'm already here, let me kind of go through all this with you, okay? So this right here, this dashboard, it comes when you purchase the Trading Zone Live, which is our signal service, and we'll talk about that in a bit too. But this right here, is point of control. What this tells you is how much volume is flowing in at any given price level. This right here, you see the white areas? That's 70% of the volume, okay, over the last 5 days. And this is the highest level volume period in the last 5 days, 691. We're actually below fair value right now. So the market still has some potential upside, okay? That level right now, and I think this level is going to start shifting pretty soon. But for now, that level is at 691.90. Okay, 691.90. Typically, price likes to gravitate towards the average right here. This is the highest level traded in the last 5 days. So we're still below that level. Okay. And what we want to see is if price is getting too far above it or too far below it, and whether it's staying in this value area. This is called the value area. Okay. So it's a miniature volume profile. This is ADD. This is really, really important, and this is a tool that most folks do not use correctly. Okay. This tells you how many people are cheering you on in the audience. Okay. This is telling you how much activity is in the market currently. And I'll explain to you how it works. Anytime the ADD, this is ADD right here, and it's all over the place, but it's above 1,000. Now, typically when it's above, I don't really look at it if it's less than 1,000, but it's above 1,000. And what it's telling us is that a lot of stocks are trading above yesterday's close. When you have a lot of stocks trading above yesterday's close, that means there's real momentum coming into the market because you have to sustain that move. You can't just buy. It won't just stay there. It has to be sustained. So you have sustained buying. What this also means is the markets are not random. There's a lot of participation right now to the upside. which means I would be I would be much more careful with my stop losses versus being in a market that only has an ADD at 300, which is basically telling me it's doing this. Just because think about this. If I have over 1,000 stocks, there's only about 3,000 large caps. If I have less than that, if I have over 1,000 stocks, okay, trading above yesterday's closing price, right? That's telling me that these stocks can either go higher or they can go lower. That's called volatility. But if a stock is trading right where it's, let me explain what I'm saying. Let me give you a good explanation, a good analogy of what I'm saying. Take a stock that closed at $100, okay? And the stock the next day is trading at $100.30, $100.20, and it's not going anywhere. You're probably going to say to yourself, the stock isn't going to go anywhere. It's just going to do nothing all day. And you're probably right. But what if you have a stock? What if that $100 stock moved up 10 points during the day? Well, it'll probably go down 5 points, go down another 5 points, go up. It's got movement. It's got movement. So what most folks don't realize is if you have a hot ADD, that means you have more volatility in the market. That means you should be using wider stops. You shouldn't let trades go against you too much. You should be really firm because you have volatility. But when you have when you have ADD at 200 or 300, and that means that stocks are pretty much where they were last night. There's nothing going on. So why would you need to use tight stops? Why would you need to be so cautious about where your stops are? Nothing is happening. If there's nothing happening in the market, the odds are there's nothing happening to your stock unless there's earnings or news or something impacting it. Now, what I'm saying to you right now may sound really, really simple. Maybe like, this is obvious, Roger. But let me tell you something. It takes most people a lifetime to figure out what I just explained to them. Okay? So this doesn't just tell you if you have a one-sided market, which is what it's supposed to do. This is also telling you that a lot of stock. This is telling you basically that not that the next wave in the ocean is going to be a 10-footer, but it's telling you that waves are high and you should protect yourself. Versus when you have, it's like, I'll watch people get into a stock, right? A stock, and the stock doesn't have news. It's just up a little bit on the day. And it goes against them 30, 40 cents and they get out. And I'm thinking to myself, why are you getting out of a stock when the market's not doing anything? If the market's not doing anything, the stock's not going to do anything. So it's just you're trading you're looking at random data and you're making decisions on random data, which means your results are going to be random. So what this is telling you, hey, the market's not random or the market's random. And when the market opens, this is the first thing I look at because I want to know if we're in play today or not. If we opened up today at 1349, we were in play. We were really bullish and we were in play. And by the way, what happened right after we opened? Came right back down. But again, we were in play. So it means we're in play. It means it's volatility both ways. That means keep your stops, be a little more vigilant, be careful. You can really have something go against you. You guys understand, be aware. There's danger in the air, okay? Danger in the air. Okay, so this is really important. A lot of folks don't pay attention to this, and I'm like, oh my God, you're making these decisions, and the ADD. You could tell a lot by how people are trading in light of ADD. You could see a lot of what level they're at. Okay, so I've explained this, the fair value, and price likes to gravitate towards fair value, which is right here, 5-day point of control. This is like a magnet right here. Okay, so I've explained this. Now. This right here, this is the tick. This is really, really important for very isolated incidences. And I'll tell you what this is for. You want to use this. So let's say this is at 300. Okay. This will be useless. But let's say this is at 1,000. Now we got something to work with. So let me explain to you what it is. This is the gas pedal. This is the steering wheel, and this is the gas pedal, okay? So let's say that the steering wheel is turned all the way, but there's no gas coming in. You're just going to go like this in your car. You're not going to do anything. You understand? You're not going to be doing wheelies. So, but this is the gas pedal. And what happens if you put a gas pedal on and this thing is quiet? Same thing. So you got to watch them together. But one of the biggest things I look for here is for solo candles. So let's say, okay, let me give you a good example. Okay, this is actually a really good example. Okay, when did this happen? This candle happened at 11:35. Perfect, 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 perfect. 11:35. Okay, here's 11:35. Okay. Let me go back. $11.55. These are 5-minute candles. So how about this one right here at 11:55? Okay, 11:50. It's a big candle. It's a big candle. 11:55. Okay. Let's see. What were we doing at 11:55? This is the 11:55 candle. Does this look to you like anybody's pressing on the gas pedal? No. This is the gas. The gas pedal is up here. 900. There's no gas pedal here. Okay. Nobody's pressing on the gas pedal at 11:55. So you look at this down move, right? And you look here and you say to here, there's nobody pressing the gas pedal. This is not sustainable. And what happens the next? It reverts right away. It goes back up. So what you want to see is if you see a big, big candle, like, okay, like right here, this happened at 10:25. It's a big up candle. This is a big, big up move here. 10:50, 10, what was it? 10:25. Right here. We went up to 500. It's nothing. It's nothing at all. Look, 1,000 is something, 1,000 is 900 something. So when I look at this and I see a move like this, and I see that this is at 500, that means there's nobody. That means it's algos effing around with you. Excuse my French, trying to get a reaction out of you. This gives you the level of commitment. Do you understand? In real time. So when you see big solo candles, solo means single candles that have no follow through, like this candle right here. It goes down, and what happens? It reverses. So let's see what happened. 10:20. Let's see what happened at 10:20. Nothing. Nothing. It went up to, didn't even go above 500. Nothing. Nothing. Which means this doesn't have much institution in it. So this is our way of identifying institution. Is this helpful to you guys? I want to make sure that you guys are getting value out of this. Okay. I don't look at the trend. I do not look at the trend. And yes, we have this for Thinkorswim and TradingView. Okay. So this is telling me whatever I'm seeing, I want to see if it's real or not. I'm going to look at the tick. If I want to see which way the wind is blowing, I'm going to be looking at the volt. If I want to see if that ball is being bounced hard or just or just kind of being dribbled like this, like noise, then I'm gonna look at this. So all of these things give me a different perspective. And obviously VIX, this is volatility. We look at Volt. Volt has been going up straight up without a stop all day long, without one pullback. And look at VIX. VIX is going straight down. And bonds are going straight up. That's a bullish move. That's a bullish move.
Something else, Roger, I like about the ADD is I know that, about 15 minutes before the market opens, it's the first place you look because you're looking for some kind of a precursor as to what might happen when the market opens.
Yeah, the first thing I look at when the market's opening is I'm looking at that ADD.
Yep.
And I tell folks like, hey, we have an ADD today. We got something to work with. If you want to scalp, okay, if you're going to scalp, you're going to need volatility. You want to have a pretty good ADD or news, one or the other. Yeah, just one or the other. I mean, also remember something. If you're trading individual stocks, everything I'm saying right here applies to the overall market. If you're trading a stock and that stock has news, News. That news overrides all this. That means the stock is in its own bubble for, depending on the news, anywhere from 2 days to 4 days. And then it reverts back to the market. Okay? Okay. So all of these, when you combine all of this, you start getting a really good sense of what the market is doing and price action.
Mhm.
And that, my friends, is really, really important. 1 second. I'm just looking at something here. Yeah, I own some of this stock. Let me give you guys a trade. It may be a little too late, maybe not, but I like this stock, ASTS. It's a really good look to it. Okay. It's an A line too, by the way. Okay. All right. Let me give you stocks that I'm looking at, and then I'm going to talk a little bit about Trading Zone Live, and then we have a presentation for you guys. But
Yeah. Hey,
first,
Roger, one real
yes,
quick question. It was just
yes.
posted here, and I'd be interested to see if you could show that. So the question was this: yesterday afternoon, I mean, the SPY took off, okay? And the question was, did the market internals support that move, give you a heads up that that was coming? For example, was the Vold, the leading cause of that?
No, yesterday the Volt was all over the place. No, it was not. It was more reactive because yesterday everything yesterday was completely driven by news.
Yeah.
It
Okay.
was not driven by remember, news overrides technicals.
Yeah, it's true.
News completely overrides technicals. You can't, I could have the right now, well, we don't have to go far. Right now, the market's looking very bullish. Everything is looking bullish. VIX is going down. Bold is going straight up. I mean, ADD is just kind of doing its thing, but it's over 1,000. Bond market's going straight up. We haven't seen any uptick or downtick in tick. Market's looking lovely right now. If right now our dear president comes out and says, I'm making this up, obviously, as I'm going along, we're firing, what's his name? I
Powell.
almost said Greenspan. We're
Powell.
Powell.
Yep.
Thank God I still remember his name. We're firing Powell. And I mean, he's not going to do that, but I'm just making this up. All bets are off. That's why I detest when he talks during the market hours because it interferes with the natural rhythm of the market. And then the
Mhm.
market has to reset itself, which means it makes my job much harder. So for no reason. It's like, you know what it's like? It's like you're at the nice beach and you're relaxing and everybody's having a great time. And from nowhere, all of a sudden, this huge storm comes, and people don't care what that's it. They're gone. They're done. That's it. That's how fundamental news works. And again, I'm just trying to be extreme.
No,
It
it's
doesn't
a
have
good
to be.
point.
It doesn't have to be President Trump firing Powell. I'm just using that as a metaphor. But it could be anything. Intel can come out right now and say, let's say Intel right now comes out and says we're pausing our release of data tomorrow. Oh, this market's going to fall apart
Hmm.
because people are going to start being concerned that Intel's not doing well because of that, which is probably about. And it's not going to happen. I'm making all this up. I'm
Right.
making all this up. I'm literally just trying to
So
illustrate
people
a.
did, so for people just trying to make sense of yesterday, and Roger, because I'm with you every day, basically all day long. Look, Roger expected that there was going to be a correction from what happened. So the kaboom yesterday is more of a recovery than anything else. The day before, right, Trump threatened that he was going to put tariffs on all of Europe. And then that morning at Davos, he said, hey, I got a deal for Greenland. I'm going to cancel all that. But the expectation was going to be there was going to be a recovery. And Roger, as a technical analysis, you identified that. You said there could be other
Yes.
things that are here, but my technicals are telling me we're going to have a recovery.
Yeah,
Anyway,
and
yeah.
technicals. I'm going to tell you, I'll listen to technicals every day and twice on Sunday. You know, the technicals, as I said, they've been able to tell us 100% accurately, at least a week in advance, every presidential election from as far back as I can remember. If you just know what to look for.
Hmm.
Yeah. And by the way, for the last 3 or 4 of them, I've done it live here with you guys. Okay. And I've talked and I've showed you. See this? This is telling us that this guy's going to win. You see this? This is telling us that this guy. There's no ambiguity. It's very clear. Very, very clear. Okay. All right. So let's talk a little bit about the overall market. Right now, just move this back here. I have a lot of charts, as you might have noticed. Right now, let me see how many stocks are making my watch list here. We have 374 stocks right now. 374 stocks making 20-day highs. We have enough oomph for another push up. Okay? We have enough oomph for one more push up. And then this market's getting overdone. So we have to be very, very careful here. Let me show you something. Here, let me make it bigger. Okay? This is going into Thursday. This is exactly a week ago. This is coming into Thursday of last week. This is Wednesday night. So we were looking at this data last Thursday morning, okay? Before the market opened, okay? And you could see right here, we had over 400 stocks here, okay? Look at the next day, 420. Look at the next day, 325. Look at the next day, 151. Now look, 352, 374. That's today, and that's coming into Friday. Tomorrow, if the market keeps going up and gaps up, this will be at over 400. Every time this goes between I don't want to say 400, 440 to 500. 500's hot. It's up here. Here it can go to about 550 because people fear more than they agreed. But once this gets over 420, 440, I'm expecting the market to pull back. Okay? I'm expecting the market. So we're starting to get up there, a little uppity. Okay? We're starting to show SMH getting a little overextended and not participating in this rally anymore. We have earnings on Intel tomorrow. Let me see how Intel's doing. Intel's very strong. Overall, very, very strong. Very, very strong. Look at that. So before earnings, Intel already ran up from 35 to 55 before earnings. Be careful. Let's be very, very, very careful the next couple of days. Okay? Also, I don't like this bond market. I mean, I like it right now, but I don't like where we are. I don't like this bond market. We're still below the American flag. So there's really nothing good about this. So we got to be very, very, very careful. Okay. So yesterday we talked about levels, and I explained to you yesterday I showed you how to trade those levels yesterday using a 1-minute chart. Today, a few people asked me, Roger, you mentioned very briefly yesterday about trading futures versus trading options. Can you go over that? So let me explain that a little bit to you guys, okay? And again, this is just educational purposes. I'm not advising you to trade one versus the other. You have to make the decision. You have to make the decision for yourself, and it's a personal decision. But my suggestion is to at least have an open mind and just kind of see what's what, because there are advantages to it. So let me start off by explaining that when you're trading options, okay. So let's just say you want to trade the SPY, okay, and you want to trade this stuff. Well, there's several choices you've got. You could trade the underlying. If you have a $500,000, $1 million account, you got 4 times margin during the day. You can buy shares. I do it all the time. The day before yesterday, I went long 200 shares. I bought about $120,000 worth of SPY. I should have bought more, but I only bought just a little bit in my retirement account when we had that dip, right? And I sold it. Last night and this morning. But my point is, I do it sometimes. So you could do that. You could day trade using the underlying. That's the most efficient and that's the most liquid way of doing it. But you got to have a bigger account. The second way is you can buy options. You can buy options that either expire today or you can buy options that expire tomorrow. If you buy options that expire today, okay, those are the best scenario early in the morning between 9:30 and 10:30, I would say. After that, the decay starts coming in. So if you know how long you'll be holding positions for, if you look at your journal and you know that you never hold a position for more than 15 minutes, for example, zero DT options are great. The problem is we don't know how long we're going to hold the position for. For example, sometimes we hold a position for 90 minutes. Sometimes we hold a position for 5 minutes. We really don't know. Matt, what's the average time we hold a position? Do you have that data? I bet you he's got that number too. We've been number crunching for the last 2 weeks. I'll tell you when we're done with it, but we've been doing a lot of work. Do you have the number, Matt?
Pulling it up one second.
He's pulling it up right now. He'll tell us the average trade. And again, this is after 400 trades. But let's say you're never in a trade more than 15 minutes. You could probably trade zero DT till about 1:30 in the afternoon. Then there's 1 DT. 1 DT means it expires tomorrow, okay? Expiration is right when the market closes. So you either buying options that expire today after the market closes, or you buy options that expire tomorrow after the market closes. Right now, it's already 12:36. So let's say I buy a zero DT option. That option, you blow on that option, it's going to start decaying in value. But a 1 DT option will still be reasonable. It'll be okay. It won't be too bad. So I prefer to do 1 DTE. My cowboy assistant here that you see on the other screen with his hat, he likes to delve into zero DT and 1 DT. But the problem is they both have decay. The downside of 1 DTE is your profits are not going to be as huge, and your downside is, and your risk is not going to be as huge because your movement is less. Zero DT, you can buy an option for 20 cents and then add the money, Jen, and then find out in 5 minutes that it's worth a quarter of that. So you got to you got to be careful. And I'm going to be honest with you. If you spend 3 days looking at the market for a couple of hours, looking at zero DT versus 1 DT, for example, if you just do this, you will know exactly what I'm talking about. You'll see the numbers. You'll see so right now the zero DT option at the money costs 64 cents. Tomorrow's DT costs $1.82. Okay. Now, don't think these will not give you enough liquidity. These can go down in half and they can go up in half in one day, but they're not going to give you as much leverage as this. Okay. That's just crazy leverage. Again, if you like to do it, that's fine. Market orders. You don't have to worry about limit orders. You don't have to worry about just market orders. They're really, really tight, but these are really, really sensitive compared to these. These are 1 DT, and this is zero DT. Okay.
It's 48 minutes.
48 minutes. 48 minutes. So here's the problem. 48 minutes at 9:30 in the morning. 48 minutes at 1:30 in the afternoon, your profits are wiped off. See what I'm saying? It's going to eat into your profits. You do a 48-minute trade at 2:30 in the afternoon, you could say goodbye to your zero DT. I don't care how much money you're making. Unless you're in the money. So my point is 1 DT for all you beginners. Now you'll pay a little more, but you're a lot more protected. You have a lot more safety. You have a lot more holding. Trump sues Jamie Dimon? Oh God. It's a joke, right? Is that a joke?
No.
All right. Whew. Ooza.
Oh.
Ooza. Do we know why he's suing Jamie Dimon?
They debanked him.
They debanked him. It's retribution. Anyway.
I did not know. Okay. Well, there we go. Anyway, I'm going to behave myself. No comment. So anyways, he says a lot of things, Hal. Yeah, I didn't know he was debanked. They debanked me. I didn't go suing them, okay? All right. Anyways, whatever. All right. Well, the market doesn't seem to be reacting to it, so it doesn't really matter. Yeah, because this is not going to make much of, it's a personal issue. Kicked him out of the bank. They kicked him out. All right, so let's continue. Let's just forget about this. Bank of America is probably happy about this. That's all I care about. You're welcome, Raymond. You're welcome. Thank you for that. I appreciate that. Very kind of you. Very kind of you.
So with an average hold of 48 minutes, Roger, your point was pretty salient. And that is if you're looking at early in the day with the zero dated option, you should be fine with that. But if you're later on in the day, the decay is just going to wipe out your
You're,
profit potential. So you just look at a one dated option there.
exactly. Which you could trade in a cash account.
Yeah.
And they usually are about here. Let me show you. For example, right now, just to give you a practical example, right now it's $183. So open up 2 cash accounts for $1,000 each. Okay. Now, open up an account and put $1,000 or $2,000 each, and then you have 2 cash accounts. They settle the same day. Raleigh and I, we know that they settle the same day. So you could trade this till your heart's desire. Now, let's go on to the other part of the equation. Let's say, and I haven't given you my top stocks yet, which I want to do. And by the way, not a lot of them are tech, so we still have a lot to talk about. So that's what Ruth did. But let's say you were a little more adventurous, okay? Let me tell you how you could trade these options without a big account and without any time decay. There is a thing called E-mini S&P. The ticker symbol for that is ES, or what is the micro one? What's the micro? Matt,
MES.
MES. It's been a long day. MES. I've only typed it up a gazillion times, but anyway, MES. Thank you. So, so let's just hypothetically say that you want to trade this asset without any decay. Okay. So here is Thinkorswim, right? And here's my Alpha Zone Pro. So look, there you go. There's your MES. Does that look familiar to you?
Oh my gosh, yes.
So look again.
So these are your levels for the futures markets.
Here's my SPY. Here's my SPY. 690.87, and here's your MES. Look. There it is. Same thing. Tracks exactly the same thing. Okay? So this right here, each point, you could trade this with TOS. Okay? Each point is $5. Don't do ES. Don't do ES. ES is the same thing, but each point, it's identical here. Look. But each point is $50. So for example, to go from 690.60 to 690.65, right? See 6960, 6965. That's 5 points. That's $25 per contract. Well, Roger, how much does it cost to do this MES with no? And I didn't say options on futures. I just said MES, not options on MES. The MES. So let me show you an example. So AMP futures. If you were to go to a futures broker, and I'm randomly picking this one. I don't have a relationship with them. I don't even have an account with them. So let me show you. $100 to open an account, $40 micro E-mini S&P margins. And you're in the game. And then you could trade this. So again, 690.53 to 690.60. That's 7 points. That's $35 right here per contract. $40 micro E-mini margin. You want to be a big boy? You want $350 here? You trade the micro, the ES. Now you don't have to you don't have to trade 10 of these. You just trade one ES versus MES. Here you have no decay because you're not trading the option. This is the underlying. They're good for 4 months. Each contract's for 4 months. Okay? So if you go to now, you're probably thinking, I'll just go to Thinkorswim. I already have an account there, and I'll just do it there. You could do that.
Mhm.
But your margin is not going to be $40. Your margin's going to be $2,500 because what they do is they charge you overnight margin at a stockbroker. Future broker, unless you're holding overnight, will only charge you day trading margins, which is right here. And again, it doesn't have to be AMP futures. It could be Ninja Trader. Okay. Pricing. Look. Here. Hold on. Where's margin? Margin. Come on. Margin. Where's margin? Here. Let me just cut to the chase. Hold on. Ninja Trader margin E-mini day trading. Here it is. Margins. Yay. We found margins. Just to give you a hypothetical, okay? Why doesn't it just give me my margins already? Here's micro. Okay, here we go. What are the margins? It takes a long time to find all. Okay, $50. $50 intraday for micro E-mini and $500 for the regular. The other one was $40. This is 50 and 400 versus 500. So don't come crying to me and telling me you can't, and it's $100 or like $200 to open an account. And you can integrate with TradingView if you wanted to. So again, you don't have to do this. You don't have to. I'm not telling you to do this. I'm telling you that you have choices. You could do the SPY and options on the SPY, or you could do the futures. It's up to you. It's up to you. Most folks start out with the options and then they gravitate towards the futures, okay? Because there's no decay. There's no decay. And yeah, then it reopens at 6 p.m. again. And yeah, futures are virtually around the clock. They only close for about an hour, except for the weekends. So, and a lot of us, T-Buzz, Raleigh, myself, a lot of the Jeff Smith, a lot of us started out with futures. Okay. The result, Graciela, that's a great question. How do the results compare with the options? It depends. They both have about as equal leverage. It just depends. Are you doing 1 DT? Are you doing 0 DT? Let me put it to you like this. I've never once had anybody trade E-minis and tell me they didn't get crazy leverage. I mean, look, think about this. $40 gets you from here to here. That's $35 right there. That's almost 100% return on your money to go from here to here. Don't you think that's enough leverage? And see, the options, it depends on how much of a move you get, how early in the morning it gets, what the implied volatility is. You don't have any of that with the futures contract. So you get crazy margin. You probably get more leverage with an E-mini than you do with an option, if I had to put my money on it.
Mm-hmm. The beautiful thing for me is this, Roger. I mean, you're looking at the AlphaZone Pro just as a tool, all right? It's going to give you an alert. The question is, how do you want to take advantage of it?
Exactly. You know? And again, I'm not telling you what to do, and I'm not even saying, I'm just showing you, I'm like saying, hey, you're hungry. Here's this, here's this, here's this, here's this, here's that. There are several ways to take advantage of it. So a lot of folks are like, well, Roger, this E-mini is too small for me. I want to make like $500 here. Great. Trade ES. And the commission is like 65 cents per contract or 85 cents. It's very small. It's very, very small. So again, my preference is I'd rather pay more commission and do multiple contracts and get out of them a little bit at a time. Okay. And you can put stop losses on these. You can actually put stop losses on these, not on options, but on these. I trust because they don't bounce as much. You won't be able to manipulate these at all. Not even one tick.
Right.
They will not clip you. They will not go out of their way to clip you for one tick. There's trillions of dollars involved in this.
Mm-hmm.
Okay, so
very fast fills.
Yeah. Oh, instant. Yeah, you could market orders. By the way, market orders. You don't need to worry about limit orders. Market orders. They're this tight, and they follow and they have to. You see, and the MES futures has to follow the SPY because otherwise you can arbitrage one versus the other. So they have to. Ronald says AZP gives me an 85% win rate. Very nice. And again, see, like Ronald likes zero DT, Richie likes E-minis. I know he does because he trades at a futures. So it just depends on you. Let me give you a good example. Let me give you a real good example of where one is better than the other, okay? Let's say your personal style of trading is you don't like to use tight stops. Okay. If you don't like to use tight stops, options are fantastic because options, you can't lose beyond what you risk.
Right.
Right. So if you have a huge, and so you can say, screw it, I'll just let it go. Like I'm expecting it to be above this price by the end of the day. I'm going to put $200 on the line and that's it. See ya. With futures, you can't do that. Futures, you have unlimited upside and downside. Now, what's great is they work really well with options. See, we just got a reversal signal on MES right now on the Alpha Zone Pro right here, right there, to the downside right here, and we're overextended. Let's see if we get a confirmation here. So my point is, you could trade you if you like to use tight stops, if you like to be more in control of your trade. And I hope I'm not wasting your time. This is a really good discussion. Like we're having a really good, this is like a real good discussion. If you like to be really in control every given second, and you're sitting there watching the market, E-minis are perfect. But let's say you want to go for you put your money on and you're like, okay, I'm either going to make it or not. The options are your best friend. So if you want to have that staying power, or let's say you're expecting the market to have a huge amount of volatility, and you don't want to be scalping every 5 minutes your exits, options are better. But you got the decay, so with the options, you really have to be right. With these, you can kind of play around with them. I hope that makes sense. This gives you more fine detailed control, whereas the options kind of give you that bigger move. But again, it just depends on what you're comfortable with. It depends on what the market is looking like. If it's earnings season and if Trump is speaking during the day, I would be very cautious with the E-minis because what if there's a huge gap? Whereas with the options, you have a limited risk. So again, it just depends on what you want. But we use them both with Alpha Zone Pro and in Trading Zone Live. And you can use one or the other. When we go long, just buy the futures. Go long, buy the at-the-money option. It's all good. Let me give you guys stocks that I'm looking at today, and then we're going to have a class.
And for those, by the way, so a lot of interest here in futures, folks. There's Google is your friend. I mean, seriously, and YouTube. There's so much information there on trading futures. So I recommend that you take advantage of that. From my perspective as a futures traders, one of the things that you have to be prepared for is this. Options, for example, if you get into an option, you have a lot more, if you will, wiggle room when things move against you, because sometimes you get into a stock and it goes back and it comes back up. And once again, as long as you're not at your expiration or whatnot, you're in it. In the futures market, stop losses are critical for you. And you may find yourself, if you don't understand where to place stop losses, you'll find yourself being stopped out of trades that are winning trades because your stops are too short. I don't want to overcomplicate this, but futures are a fantastic and an interesting way to trade the markets. And as always, paper trade. If you've never done this before, please paper trade these. I mean, my gosh, Matt's giving you the alerts. You're getting 3 to 5 of these a day. Just open up a futures account, paper trade it, and get used to how to go ahead and place those trades.
Yeah. Yeah. So again, take the time. Don't rush into this stuff. Take the time. Paper trade. Wild Ranger. I've had several live trading sessions, and
Like on Fridays. Sometimes on a Friday, that's what you do, Roger.
yeah, yeah. So we've had live sessions, and I'm gonna have other live sessions, and we have a live session that we recorded and put in one of those 12. I think we had like two 1-hour sessions that we put in those 12 hours in the class. Yeah, futures are in there too. Futures are in there as well. Anyway, futures are very regulated, and we have to be very, very careful of what we do. And my extent of futures with you guys is just to give you very broad, general advice, and to say, like, if you want to delve into that, that's fine. We give the signal on the SPY. Okay. The SPY controls everything. The futures traders are looking at the SPY. The options traders are looking at the SPY. If the SPY goes up, your futures will go up. If the SPY goes down, your futures goes down. They're completely arbitraged 100%. So how you take advantage of it is completely up to you. But I think me right now sitting here laying out all the pros and cons and having this discussion with you, I think it kind of gives you a much better feel of which direction to go into and what to expect, the pros, the upside, and the downside. Would you agree, Raleigh?
I agree completely. And Arnolfo just posted there. He paper trades the micro E minis every day, and it's fun to learn. He's doing it the right way.
Yeah,
And once you get the hang of it, then it's just, as Roger said, it's an option. And I don't mean to play the pun on the word option, but it's just a
it's a
choice.
it's a
Let's
great
put it this
choice.
way.
Yeah.
It's a
But
choice.
but it's kind of like, let me teach you how to drive. And here's this car, and here's this car, and here's the advantage of this car, and here's the disadvantage, and here's the advantage of this one, and here's the disadvantage. But ultimately, they're both cars and they both drive. And you're not gonna, you ultimately have to get into the driver's seat and see which one fits you better.
Sure.
That's that's just, I mean, that's how life is. It's like me trying to tell you that I like this jacket versus the one I have over there. It's just it's personal. It's
Yeah.
some people, I will tell you this. I will tell you this. Some people feel a lot more comfortable because of their style of trading the option, and a lot of people feel 1,000 times more comfortable trading the E-mini.
Mhm.
And it's like having a discussion about do you like TradingView or you like Think or Swim? You know what I mean? It's like there is no right answer. There
Mhm.
is no right answer. They're both proxies for getting the job done.
Yep.
And you can give me either one and I'll be fine with it. But I will tell you this, some people feel much more comfortable with as far as staying power, holding on to an option versus an E-mini. And a lot of people will, it's going to decay. I'm not, I don't want to take 1 cent of decay. So it's a real personal choice. So I don't want to interfere with that personal choice. I don't want to take that away from you.
Well,
That
the
it's
one thing just to close this session out, I can tell you as somebody who's traded the E-mini S&P on a day trading basis, Roger, boy, do I wish I had had a tool like the Pro Trader dashboard, for example, or the
Alpha Zone. Yeah.
Alpha Zone, because once again, what were my tools? My tools were the standard, the MACD, the Bollinger Bands, the RSI, things of that nature. Having this tool as a way to identify opportunities that translates is a game changer from my perspective as somebody that likes to trade the futures.
Exactly. And again, folks, me explaining it to you is like me trying to explain to you. It's like what it reminds
Yeah.
me of? It's like me and my wife. We try to figure out where to go in Europe on vacation, and it's like, do we go here or here? And it's like, I- there's no wrong. It's just, what's better under the circumstances for you at the time right now. And folks, don't rule out one or the other. Okay.
Yep.
Let me now before we go to the next segment. Let me just give you stocks that I'm looking at right now, guys. So short side first. Okay.
Okay.
Shopify still has some room to the 200. Okay. Netflix. I told you this morning it doesn't look good. LEGN. I'll be pretty quick here. Net, Flute, SFM. I mean, we've had this on our list now, probably 200. I'm not kidding, 200 times. RLI. Um, it had some weird volatility today, but yeah, RLI and STAA. Also on our list many, many times. Now, notice the stocks that are on my long list right now. Notice the stocks that are in my long list right now. Schwab, not a tech stock. Okay. AB&B, not a tech stock. Now, if a good tech stock was to show up, I would include it, but there aren't that many. Let me continue. What I'm trying to say is I'm not excluding them on purpose. This is what's showing up on my list right now. FTV, actually doesn't look all that good. Forget it. Scratch that. FedEx. This one looks really good on my list right now. I like it quite a bit. I'm trying to convince Matt to take a swing trade in a program, and he's trying to tell me that the options are too wide. And I think he's right. Yeah, he's right, actually. They're pretty crappy. They're pretty crappy. But what a good looking stock. I'm going to have to, 1 second, please. Bear with me, please. Just give me one. Sometimes we need to take action before we forget. I'm just buying a couple of shares for myself. I hope you guys don't mind. Okay. See, there you go. Some live trading. I bought some FedEx for myself. Okay. So FedEx I really like. Micron is way overextended. You're way, way, way overextended on Micron. Way, way, way overextended. Okay. By the way, Matt, I don't know where the upper side of my thing is. You may have to reset this for me, okay? I think I did something by accident. Eliminated it.
Oh, the dotted green lines?
Yeah. Matt's going to have to do that. When we're done here, I'll have him done. MAR. I like MAR. I like MCO. Okay. CPay. CPay. Infrastructure stock. AVY. USB. Oh, a little extended, not too overextended, just getting there, but still looks pretty good. The best ones out of this was FedEx. I like FedEx a lot. A lot. And I like USB. The cleanest ones were USB and FedEx. Those were the cleanest ones. Cleanest ones. All right. That is what I have for today. We're going to have a class right now. Raleigh will lead that off. If you guys have any questions, I will be here in the background. And Raleigh, the floor is yours, my friend.
Okay, that's great. So, folks, what we're doing here is that I'm going to be with you as well. And this is a replay of a presentation that Roger actually gave earlier this morning in another one of our Trading Pub get together rooms. And so, Roger's got some things that he's got to take care of this afternoon, but we wanted to give another presentation on the Trading Zone Live. And this is a recording of that. And so, let me go ahead and make sure everything is set up. And once again, I will be here. So if you've got questions during this replay, put them in the chat panel and I will be glad to answer them. And I also do my summary at the end. You know the drill. Anyway, here we go, folks.
So profits performance are not typical. We're not going to make any claims. What you're actually about to see right now is actual trades that we took in the free channel before we published it. Now, so far, we've taken over 400 trades. The win rate, the profit factor, they will shift. The win rate has been 60%. The average return has been 15.9%. But we take 2 to 5 trades every day. And I will show you before I conclude how you could do this with a small account, okay, as well. All right, let's begin. Folks, there will be losers. There's no black box miracle system that prints out winning trades automatically. The whole purpose of my research is to help you gain an edge in the markets. If you can't handle losing trades, then you really shouldn't be trading with real money. My name is Roger Scott, and while most traders are glued to tariff headlines, inflation data, Fed's next move, I've been quietly polishing up a strategy that helps us tell us every dollar that's going in and out of the market with zero delay. That's the best part, with zero delay. You don't have to wait. You don't have to wait very long for this to happen. And by tracking every last penny, we've been able to front run some of the biggest market moves in a matter of minutes. Now check this out. The SPY started selling off fast around 12:40 in the afternoon. At 1:05, I picked up that 21.7 bullish transactions were pouring in at that minute. I sent out an alert at 1:05 p.m. and we tell you what options and strike price, all that stuff. As expected, the SPY surged higher. 76% gain in 33 minutes. And again, the very next day, the SPY dropped hard at 1 p.m. At 117, we had 12.4 million bullish transactions flooding into the market. I sent out an alert at 1:17 p.m. Sure enough, over the next 18 minutes, the SPY shot up like a rocket ship, 58% in 18 minutes. And again, later that afternoon, the SPY was treading water heading into the close. But at 2:48, bullish transaction, 9.1 million bullish transaction hit the tape. I sent out an alert at 2:48. Anyone could have placed a quick trade when they felt a bzz, 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 bzz in their pocket and made out like a bandit on that one too. That's a 74% gain in 59 minutes. In fact, just yesterday, we knocked it out of the park with one of our biggest wins yet, 179% gain in 29 minutes. And you guys made out like bandits. Look at that. As a matter of fact, we just made out right now with a good one right now, right here. Go long SPY, 687.37, 688.37 right there. Nice handle. Nice early morning Thursday. This isn't some theoretical back test. And we've been doing this with over 1,100 members in a program called Trading Zone Live. And when I say we've been on fire, we've really been on fire. What do people have to say for themselves? I'm up over 10,000 month to date. Carlos, thank you. Don, 1,500 per day. Jason, I've been averaging 2,500 per week. Jason's now doing about 35 to 40K per month. He's now a full-time trader. Harold, doubled my account in 3 months. Tony, 200 to 800 almost every day. This is Tony sending us a screenshot of him doubling his account. From April 16th through May 16th, my account went up from 250 to 1430, 427% return. Don, $10,800. There's Dave, $8,800. There's HG. She trades from Israel, 93% win rate. Joanne, $48,000 from April 20th through May 2nd. Esther, $78,000. I love it. Richie, $104,000. Richie's doing a lot better than that now. He's doing really, really well. And then he bought his daughter a new car. Just like that. Very nice. I love it. And sent her to college. Now, I have to say, those are some of the best stories I've heard. And I get like, just this morning, I've already gotten about 50 testimonials. I'm not kidding. I get a lot of testimonials. But unlike most trading rooms that pump and dump, we don't do that. We're not trading 1,000 tickers in this room. We do, but not in this room. We're not constantly refreshing our scanners in this room. I do that in another room. I do that plenty. We're tracking every dollar that's going in and out of the most important market in the world, the SPY, the S&P 500. Not only does this powerhouse tickers pack the punch of all your favorite stocks in one single package, but it now has options that expire the same day and the next day. And that opens up a whole different world for us. We're now able to target double, sometimes even triple-digit gains in a matter of minutes. 31% in 16 minutes, 54% in 11 minutes, 121% in 32 minutes. Now, if you told me you had a way to track and trade every dollar going in and out of the SPY in real time and use that intel to target returns like 121%, 54.31, then I'd say you're doing really well. Now, here's the deal. We don't just get one of these opportunities a day. We get 2 to 5 per day on average. We've already had, how many do we have today, Matt? 1 or 2? Yes. Oh, we have had 1 so far. Well, it's still early. It's only an hour. Yeah, 1 winner. That means whether you're retired, work full-time, trading for a living, or just dabbling in the markets, it doesn't matter. There's always an opportunity. All right? There's always an opportunity for you. For example, take a look at what have happened Monday, June 23rd at 10:23 in the morning. You could have been enjoying a walk with the dog in the morning, felt a little bzz, bzz, bzz in your pocket, pushed a few buttons on your phone, and 5 minutes later, 28% gain in 5 minutes. Then again, while grabbing lunch with a friend, you got that bzz, 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 23% in 21 minutes. And again, 2:32, 84% in 29 minutes. And again, at 3:48 p.m., right before the market closed, another one, 116% gain in 10 minutes. Let's say someone put $2,000 into each of those trades. That could have been over $5,000 in profit. And that's after just 1 day of trading. Imagine what that could have accomplished for you. Now, in a moment, I'll give you a chance to join us on the very next trade, one that could fire off within the next hour. I'll Plus, I'll share with you a simple money flow indicator that helps us forecast these price movements before they happen, an indicator that's already hiding within your trading platform. And I'll teach you how to use it today at no charge. So if a free bootcamp trading session sounds peachy to you, and you're ready to join hundreds of traders with Trading Zone Live, then post yes in the chat, why don't you? All right, let's do this. If this is your first time live with me, my name is Roger Scott. I've been doing this not for 31 years, it's actually 32 years now. I've managed money with Kevin Hassett, the senior financial economist of President Trump's administration. I've managed money with Charles Calamirez, the head of finance in Columbia University. They frequently advise the White House. Kevin is still could potentially take over Powell's job. And I've also worked with Curtis Faith, who's the youngest turtle trader, and Tony Saliba here at the pub, who is a market wizard from the Market Wizards book. Now, for the past 5 years, I've been actually teaching other gurus. There's Kane, there's Celeste, there's Matt, there's Murray, there's Jim, there's Kathy, there's Ken, and guys who work at the pub here. And I've also created Alpha Zone Pro and the Pro Trader Dashboard. We have a 94% accuracy in my PIT program right now. So I've done some pretty good stuff. Now, as great as these achievements are, they don't hold a candle to the discovery I'm going to share with you today. It's a new way to target double, sometimes even triple-digit gains, 3 to 5 times per day. What is the secret sauce? A money flow indicator that only exists to day trade the SPY. You're not going to hear about it Fox or CNBC, and it doesn't work on traditional stocks. It only works on the main index, okay? Unlike most indicators out there that give you buy and sell signals, the money flow indicator is very different. It shows us when capital is flowing in or out of the S&P 500 in real time. In real time. And that's important. That's very, very important because it means we can use it to help predict where the SPY is, in fact, heading next before the price makes a move. Now, I know that sounds crazy, but check out what could have happened on Tuesday, June 24th. What you see here is the 1-minute chart of the SPY. As you could see, it opened higher in the morning and then began quickly selling off. Now, most traders probably expected more downside continuation from this move, but I knew that the bottom was in and the SPY was likely be forced to go back up. That's because the money flow indicator flipped bullish at 10:15 in the morning. I immediately sent out an alert at 10:15. As expected, over the next 32 minutes, the SPY took off like a rocket ship. A lot of you guys made a lot of money. Folks, it gets even better because it wasn't the only opportunity that would have paid out big that day. 2 hours later, same setup. The SPY was drifting lower late in the afternoon. At 125, the money flow indicator flipped bullish. Anyone could have placed a quick trade as soon as I sent out an alert. Bought the exact bottom on that one too. 76% gain in 39 minutes. Now, in a moment, I'll reveal everything behind the money flow indicator, including how to trade it. But first, let me just say this. If you've ever struggled in the market, feeling like you're constantly taking 1 step forward, 2 steps back, it's not your fault. I've spent a lot of time doing this, 32 years to be exact. And I found that the number one reason people fail is they only look at price action. They kind of forget about all the other stuff like volume and all that stuff. It's a real problem because money flow is what drives price. Price doesn't move on its own. It moves when buying and selling pressure shifts. And when more demand is building up on one side versus the other, it creates an imbalance that starts to build under the surface. And that's what ultimately pushes price in the next direction. What you need is a way to track this undercover buying and selling in real time. That way you can get in while the smart money is building their